Latest research into the state of South Africa's retirement fund industry revealed that numbers of large umbrella funds do better than those in smaller standalone funds. Joining me for a look at this in research is David Gluckman, Head of Employee Benefits at Sanlam. David, I read the report, and the first thing, like I just mentioned, that came across to me was the fact that members from larger funds do better than the ones from smaller funds. Why is that?
Amir, thank you very much. It really just comes down to cost. There's a fixed cost element to running any fund, and the more members you've got in the fund, I mean, you just divide that fixed cost by more members, and you'll get a lower unit cost per member. Now, that's obviously one of the big pressures we've seen. I mean, Pravin Gordhan, our finance minister, has really thrown the gauntlet down to the private financial service industry of how do we get a better deal for the end consumer, the member of the retirement fund. So that's really what we focused on the research this year.
And we have actually in this industry seen funds consolidate and good competition there. Is that a good thing for this industry?
Look, I think most important, and this is what government are really saying, is never mind the industry. The most important is the end member, the 10 million or so South Africans who saving for their retirement through retirement funds. I mean, retirement funds account for something like 50% of total household savings in South Africa, sitting at like 2.4 trillion of assets at the moment. So it's a major industry, and we've got to find a way to get a better deal for the end member. So if consolidation of funds is the way to do it, then I mean, we're all in favour. And in fact, our research backs that up. What we've seen, I mean, we interviewed 188 standalone retirement funds, the principal officers, and when we compared costs for funds between 100 and 500 employees versus more than 5,000 employees, the costs per member were double in the smaller funds compared to the larger funds. So that indicates we've got to change the structure of the retirement industry. There are about 2,500 active retirement funds today. We probably want to bring it down to in the tens or maybe a couple of hundred funds in 5 years' time.
So that's a significant move to the downside, decreasing the funds and increasing the size of the funds for the economies of scale for that sense. Now, if we look at the member, looking into their retirement fund, how can a member actually influence the investments in their funds? I know that some of the funds you can actually pick your investments, but many of the funds you're not allowed that luxury. Younger members should most probably have a higher allocation to equities and higher yielding assets in any sense than probably closer to retirement.
Look, that's 100%. Definitely younger members should have a much higher allocation to equities. I mean, the maximum you're allowed in terms of the Regulation 28 legislation is 75% equities, but we'd advocate getting quite close to that for long-term, because these are long-term investments. Whether members having their own choices adds value is less clear. I mean, it's, the reality is our research indicates very few members actually make use of those choices, and it's not clear they make the right choices where they do make choices. Sometimes they make emotional choices. So I think, yes, we do want choices for those sophisticated members who are able to do it, but what we really want is the retirement funds to have appropriate default investment strategies that the members can benefit from. Now, your question of how can the members influence it, the easiest way is actually to go and vote for the trustees who will actually act in their best interests, and that's the way members can influence investment decisions, because retirement funds in legislation anyway are very democratic animals.
So it's a case where members should actually be more involved in their retirement, picking of the funds and choosing what they want, and gaining a little bit more knowledge would probably be very beneficial to those members as well. Now, just another question that I picked up that I wanted to ask you is, what do you expect going forward would be those the factors that would influence this industry the most? Look, in the next couple of years,
the biggest factors are the challenge from government. The possibility of a national social security fund, if we as private sector don't get this right, is one possibility. But the issue of how we consolidate all the thousands of funds and get a good deal for the members is the most important issue that players are grappling with. In fact, what we did is for umbrella funds, because what we've seen in more and more, the major institutions are sponsoring umbrella funds, and we've seen increasingly we've now got coming up to 1.5 million members in commercial umbrella funds, which is a big percentage of the market already, and almost all small to medium-sized companies participate in those. So what we did in the research this year for the first time, because this is the 31st year Sanlam have done this research, but for the first time we actually went, instead of interviewing companies and the principal officers, we also interviewed the business heads of the major umbrella funds to see their views. And I mean, basically the industry's seen it very much the same way. Consolidations come in, and we've got to find a better way to get a good deal for members.
So we'll have to hope for that consolidation. And at the end of the day, I agree with you. The focus should stay on the member and the best choice for the members. Thanks. That was David Gluckman, Head of Employee Benefits at Sanlam.